The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. That is me. And, of course, the FOMC meeting announcements just out. Not a lot of changes out here, but market's trying to figure out what reading between the lines. Kind of reminds me of during the Cold War, there were always people standing next to whoever the Politburo chiefs were, and the CIA was always trying to figure out what it meant when someone was standing next to them. If they were always standing next to them, if they weren't there the next time, is that guy out there in the middle of a ditch somewhere in communist Soviet Union? It always meant something, they thought. And sometimes, like a famous psychologist said, a cigar is sometimes just a cigar. And I have a feeling that after all the ruminations and hand-wringing and probably incalculable, horrible decisions and opinions being given on financial infotainment cable stations today, the market will make its decision, not based on anything that the so-called wisdom or wise men of Wall Street on CNBC say today. But we're just about flat. We were up a little. It tried to go down a little after the announcement. And my guess is that more than anything, the men of the street want this market to hold right around 2,000 for Friday's IPO. And the next hurdle, of course, will be the Scottish election, which we'll get to in just a minute. Probably the big thing is looking at the dollar index. It popped on the news. So I think the thought was maybe that they would have some more dovish language in there, and not having the dovish language probably pushing the dollar a little bit. What I do see, let's see what I have for the dollar index. Yeah, 84.50, so up 27 cents. So fairly strong out there. Now, basically, what everybody's searching for is what most times we see in a market, and that is a binary outcome. Either things are good, getting better, or they're bad, getting worse. And the market doesn't have a whole lot of sanguine people. People like to gang up on one side or the other. And they'll push it a little this way, they'll push it a little that way. And normally, in the end, the market will get it right. What I think that they thought would be that they were going to see some dovish language, and they didn't get it. Now, from now on, the argument is probably after this announcement going to be over, okay, is it sooner rather than later? And if it's later, then it's probably going to be more aggressive in the interest rate cuts. And if they do it sooner, it will be slower. And probably overall, it would be better for the market to start it sooner and go slower to eradicate any shocks in the system. But that's what's going to be the argument now and now for a while, as we probably bounce up and down from about 1995 on the S&P cash up to probably 2005, and they'll argue back and forth. But my guess is, more than anything, they want that Alibaba IPO money, and they could care less what the market does in the next couple of days. They are focused on the giant gravy train that is a $25 billion IPO for Friday. As we talk about history out here, as we let the dust settle on the FOMC meeting news, in 1998, the stock markets were on this day anyway, taking a pounding after Federal Reserve Chairman Alan Greenspan tells Congress that there are no plans for coordinated global interest rate cuts despite the Russian debt crisis. And, of course, this goes back to all the stuff we've been talking about over the last month or two with long-term capital management and Russian blowing up and long-term capital management trying to put a hole in the bottom of the boat. Greenspan says he's immediate need to relieve the peripheral gusts of financial turmoil. The Dow Jones Industrial Average slumps 216 points, which was huge, 2.67% that day, and the NASDAQ lost over 2.5%. Japanese market fell 2.4%, German stock 3.9%. And he twiddled his thumbs all the way, I think it was in October. And at that point, we actually saw one of the largest turnarounds. Was it in October, late October? All I can remember is they came out about 1 in the afternoon while the Dow was down the equivalent of what it would have been down 500 points. And by the end of the day, it was up 500 points because they did come out and get active. But it took a whole nother month for old Alan to get into the driver's seat and start throwing some cash around and get the markets from turning a dour, sour note. But this period is always interesting to me because you always need to know that someone can be lurking right around the corner, ready to drop helicopter Ben and his cash out on top of the market when it's looking bad. Now, we were talking a little bit, and a couple people emailed me some questions, and I just wanted to get to it today. And you can email me, too, at path@tfnn.com, or you can give me a call at 877-927-6648, or you can post a message in the den also. But what I'm saying, well, it's there was some question about short interest and how I gauge it. And one of the things you have to know is the way that short interest is reported. And I've called FINRA a couple of times. They are the regulatory board, self-regulatory board. Of course, it doesn't do any good to have rogue brokers out there fleecing the public and taking cash when they can do it so easily themselves and not have a crisis of confidence in the market. Anyway, FINRA, which is the association of all these broker-dealers, are required to report their short positions as of the settlement date on 15th of each of the month. So your broker, my broker, all brokers, hand in hand, on the 15th will, at the close of the day, issue a report with all the stocks and how many shares are short by any of the people or the company themselves, and they send it on to FINRA. 8 business days after the reporting date, they will release that to the exchange itself. So the New York Stock Exchange and the NASDAQ and the Amex all get a report from them. It is very unclear at that point what happens. No one will go on record on what happens, so I'm assuming that there's probably some nefarious things going on, like making sure that they get the information at least ahead of the rest of us in the markets. But you can pay some big bucks to get that data, and so I assume they probably delay it like a great deal of other things out here in the market. And but remember, when you're looking at short interest rates, you've got the 15th of the date, you've got 8 business days, and then you probably have about 1 business day before you actually get it from the broker-dealers, and it shows up on Yahoo or MSN Money or your broker-dealer. And I suspect that they see it probably a half a day early before we do, although I have no knowledge of them doing it. Since they won't comment on it, I'm assuming that just like everything in the market, they are more than willing to delay that kind of data so we see it just a little later. Probably not a huge deal unless you see a stock go from a 15 to 30% short interest rate and you decide that you want to put a big move on as an operator and squeeze those shorts out. When 1/3 of all the shares need to be squozen, it's pretty tough to see a market go down. I've seen some pretty horrible stocks rally. I remember Enron. Everybody knew it was broke. Went to $6, went back to 10. And everybody knew it was going to zero. And the thing was, if you covered it at 6, you weren't going to get the shares back at 10. They made sure that if you covered, you weren't going to get those easy shares to make 100% on your money. But at the same time, you have to think about it. But remember, you're at least 8 days, business days, and probably more like 10 days or 11 days behind. So all the data on short interest is looking in the rearview mirror quite a distance. Of course, we're going to be waiting for the Scotland news, and we did look it up, and the results will start to come in as early as 1:30 a.m. British summertime on Friday. So figure 5 or 6 hours. That will take us back, of course, to probably about 8 o'clock at night, 8:30, 9 o'clock Thursday night. If you were planning on staying up and playing some futures overnight, I would probably get a lot of rest somewhere between the close on Thursday and the results when they start coming in. Now, if it is as close as polls indicate, we may not know till maybe midnight to 2 a.m. on this side of the pond. So that would be it. Don't mention Enron. Why is that? Anyway, that's one of the things out here. What else do we have going on? Mr. Softy is getting new board members, getting rid of a couple of other people that were stalwarts of Bomber's reign. They'll be getting out. The new ones are going to be the CFO of Kraft Foods and the CEO of Visa. Kind of interesting to see the CEO of Visa getting into the Microsoft camp, which, of course, all these guys are supposed to be in the Apple camp. Wonder what that means by the CEO of going over there and joining old Mr. Softy. I think that's very interesting. Anyway, a couple of the old guards are going to be retiring, and the new guys will be on as of October 1st. The reviews are coming out on the iPhone right now. Let's see what Apple's doing out here. Up about 57 cents. This thing's pretty much in a trading range. I suspect that it's going to close somewhere around $100 on Friday. But a lot of these reviews are exactly what you would think they would be. And we'll talk about those reasons when we come back. But some interesting stuff in people normally that don't say very interesting stuff in these reviews. And we'll talk about it when we come back. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And Adobe has put out a critical update for Acrobat and PDF readers, and says that you should update post-wit. And that's interesting. Anyway, we're up here at the high, which I thought would be the top of this range at 2005 on the S&P cash. So we're going to be bouncing around a little bit. What else do we have? 1.9 billion shares. So, volume good, not great, not ecstatic. And, of course, we'll see how quick the volume call catches up through the end of the day. But we will be looking about other things. Anyway, we're talking about reviews while we're looking at the S&P cash out here, 2006. So it's a little higher than I thought the range would be. So maybe we are getting a little break here. Anyway, David Pogue said, the iPhone is not just a phone, it's a symbol. The phone you own doesn't let you make phone calls. It marks you as belonging to a religion, maybe even a cult. I think he's finally starting to get it. There's nothing actually a big surprise about the iPhone 6 and iPhone 6 Plus, partly because there's nothing much surprising about any phones these days. They're mature and evolving, not revolutionary anymore. And that's probably the big takeaway from what we're going to see as people start getting their phones on Friday and the nerdgasms of people saying I was first. But, other than probably seeing Star Wars the first day it came out, and even then there weren't big lines. It took about a week or 2 weeks before everybody figured out that was going to be big. I think that's the last thing I've ever been first for. I always thought I could wait. I didn't think I had to be the first. But, that's just me. The old Amish trader. But, of course, we see a lot of other reviewers out there that are much more in the pocket of Apple. They can't give a bad review because they won't be back, won't be given a phone next time if they do give a bad review. So not much different than the president being able to control access by which reporters he gives a interview to, and basically say, hey, I'll give you an interview again maybe someday. If you're easy on me, if you're tough, I'm never going to give you an interview again. There's the subtle pressure in the media or on the media from people who need access to it, and that's always the problem. But interesting thing, I never thought that the phone was bad, just thought it was interesting. Of course, there's a big conspiracy theory out here today on the new iPhone because the ads have been doctored. It's not just Cameron Diaz and all the Kardashians getting massive amounts of airbrushing. The camera lens for the new iPhone sticks out a little bit. Well, I guess someone in the advertising market did not like it because they wanted to show how thin it was. So they took the Audi and made it an innie on that camera. And some people are claiming foul after being brutalized by having the U2 album forced upon them on the iTunes store. And interesting to see, kind of a nitpicky thing out there, I think. But kind of funny that you'd see Apple airbrushing what they say is the perfect product. I had another question, an email, and it was about what you're actually buying in Alibaba. We've talked about it before. I said it was rather tough to understand. But here is the true technical thing since we're getting to Friday. You are buying not shares in the Alibaba company. You are buying a variable interest entity, a VIE. You better find out what these are if you plan on buying Alibaba. I'm not saying that you shouldn't. I'm just telling you, you are buying shares in the profits of Alibaba, not in the company itself. And because it is a variable interest entity, none of those shares are voting. That means that you have absolutely zero control over what the CEO and his board of directors do. The board of directors could vote him out, but that is it. And of course, they're all over there in China. And if they just decide to never give any profits back to the variable interest entity, you're going to be the proverbial guy with a bird in one hand and bovine excrement in the other and see which one. I'm mixing my metaphors yet again. Anyway, it is, you are basically buying nothing but a promise to pay profits back into this variable interest entity, as it's illegal to own companies in China for people over here on this side of the pond, anywhere outside of China, actually. But it's all about the majority of the voting rights. I think you actually do have some voting rights, but in the main scheme of things, they are insignificant, the way that this trust has been set up. So buy a promise.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And just a little bit more news as we watch the market kind of rack around here. Janet Yellen is speaking right now, and I imagine that's going to go on for about 30 to 45 minutes if history is any kind of gauge. And, of course, the most dangerous part is not when she's speaking, but when she answers a few questions off the cuff, if that will move the market. Of course, she was asked one time, what do you mean by, this considerable time? She said 6 months, and she should have said at least 6 months and probably more, but she didn't say that. Of course, the market's reacted rather violently to it. We'll see if she's been able to say nothing a little easier this time, but we're up 7 points at 2006 on the S&P cash. Volume's starting to get better, but we're not going to see any huge volume day, I think, today when we look at this. And so we'll have to keep an eye on it and see whether or not we can get back to anything of a movement. Earlier today on CNBC, Peter Thiel, who, of course, is an early PayPal and Facebook investor, and got a lot of cash, let's put it that way, not shy about voicing his opinion. And I had something here. I didn't keep it, but anyway. Twitter is hard to evaluate. They have a lot of potential. It's a horrible a horribly mismanaged company. Probably a lot of pot smoking going on there. It's such a solid franchise that it may work even with all of that, the co-founder of PayPal and early Facebook investor said. He had a lot of other things. He wasn't shy about putting out some opinions, but interestingly, the discussion of smoking a lot of dope over there. I wonder if he has any inside information on it. But certainly interesting. Maybe it explains a few things. It is a mad market, and we're going to go to the charts, as they like to say in NFL. We're going to the film. And, of course, Adobe came out with earnings last night. They guided down. Very interesting that they are guiding down and are down on volume. They're basically going back up against the gap up. That gap happened on 6/18, and 11.4 million shares. So we are right back to support level on Adobe. It hasn't broken that with what we would consider high volume. Certainly is breaking the August 7th low. There's a lot of discussion about moving to subscription-based services like Adobe has. All their products now are on something that basically is always updating them, and you buy one-year subscriptions and or pay bi-monthly subscription. I think you can buy most of their products for $25 a month, and that has been moving up. It's very weird to see them guiding down, and if you listened last night, the thing was to buy this thing today, and I think a few people have moderated that after they saw the movement today. Maybe they are guiding down for a reason. Again, we're looking at FOMC rates right now, which account for about a third of all S&P profits. If you would let the interest rate flow to a fair value, maybe 4.5% or 4%, which is about where they should be for the current state of fair value. That means that you'd probably see about a third off of a lot of these particular companies. And maybe they are starting to guide down on the fact that a lot of that easy money that made these companies so huge so quickly is going to be fading in the near future. Electronic Silicon Valley stocks tend to do extremely well in high interest rates environment because if they are successful, they basically shove so much money back. But at this point, they probably kind of paid a lot of that forward already. And we're seeing it, I think, in Adobe systems today, that their numbers look so good, but they continue to guide down. So there's something wrong in the way that they're reporting their numbers or the way they're at least talking about them, because if you listen to them, even with the guide down, basically they're saying that their subscription service will outpace the downside of the economy. But it certainly doesn't look that way with the way it is reacting out there. So one of the big movers out here today. I'm going to see if there's anything else going on. Okay. I just want to see a couple of quick things. Gold's off $2. It was off a little bit more. Dollar index just up 7 cents now. So, what can you say? And take a quick look at the S&P 2004. I thought that about 2005 was probably about the high. We got a little higher than that, but we overshoot every once in a while. We'll see how this goes after she's done answering questions. As long as she's speaking, I don't think we're going to see much difference in this market. A few things out here. I wanted to see how some of these stocks had been working. We talked about CSX yesterday, breaking through the 11 million share high of July 22nd with 11. That had 11 million shares. We broke through with 4.7 yesterday, 5.4 today. So volume is starting to pick up, but certainly nowhere close to what we were looking for in CSX. So we'll give it one more day and figure if it doesn't get volume, probably going to pull back into the trading range. Domino Death Dis, if you've had any delivered lately. Certainly another one hanging up here at these highs. DPZ, what are their earnings date? Let's take a quick look. October 14th. So you've got about a month to go on this one. And the question is whether they can hang this thing out all the way to earnings. Basically not a bad looking chart out here. One thing you don't like is that it did not test this previous low down at 69.76 on lighter volume. I would have to say that it's more likely to see the bearish case than the bullish case. There are some stocks out here that are making some nice bullish signs. If the market was going up here, I would be looking at some of these stocks. Demandware, DWRE. And on this one, it came down with heavy volume on August 5th at $50.11, 2.9 million shares, 1 million shares out here today, or after yesterday, 500,000 so far today. So fairly light volume movements and down at these lows. So you got to be looking at it. Now, Demandware provides cloud-based digital commerce solutions in the United States and Europe, and makes them easily design, implement, and manage their customer digital commerce sites, including websites, mobile applications. So interesting. And what else do we have going on out here? Chart Industries, another one out here that is testing its previous low. You notice a theme to a lot of these testing lows. That is that they are back to these high volume down days. In this case, on Chart Industries, GTLS, the April 29th low at $64.05, 2.7 million shares. Got into it and went a good, almost a buck below it on September 10th, but only had 650,000 shares, so one-fifth the volume out there? Pretty light, one-fifth. So it came back, had a nice sign of, sign of strength the day after, but not a lot of volume. It's come back down. But a very interesting chart out there. I like these kind of setups more than anything. Would have liked to seen the energy on the way down not so strong, like that huge day down on the 1st of August? Or was that 1st of September? Yeah, 1st of September. Anyway, yeah, that would have been 1st of August. Heavy day down, 1.2 million shares. But even then, we're comparing it to that high volume spike low to 2.7 million shares. But that probably just means when you see those high volume days down and then no volume at the lows, it just means that it's probably going to have to consolidate a while, and that means boring you out of the trade and making sure you don't look at it while everybody accumulates it and gets ready to spike it back up higher. They manufacture and sell engineered equipment for the production, storage, and in-use of hydrocarbons and industrial gases worldwide. Company operates 3 segments: energy and chemicals, distribution and storage, and biomedical. So hydrocarbon process systems for natural gas, petrochemical processing. Probably a big play out here on natural gas if we started seeing it finally move back up and not just flailing around at different levels. So maybe a new one to put on your radar out here. Now, a couple of gold stocks I showed in the newsletter this morning of interest to me was Harmony Gold. This came back and tested its previous lows. You could either use the 6.5 million shares of June 18th or the 5.3 million shares that we saw on the 28th of May. And those volumes basically setting up a nice low. We did tick below that 260 level today. You'd need to wait for a close back above 260. And that's what I would be waiting for. But 2 million shares so far, just 1 million shares today. But the last couple of dojis out here, 3 dojis in a row. Keep a close eye on Harmony out here. If I'm thinking that we could get 1180 on gold, but if these can continue to put in a very light volume lows and bursts without volume really picking up, these may be some of the ones that we want to catch on the fall. Heartland Express, a transportation company, truck line. You see their trucks pretty much everywhere. This one's been hanging out at the highs. It's July 24th high at $24.23, 900,000 shares. Tried to get into it on September 12th with 540,000 shares. So nice low volume test of the high. It's back up here today, 145,000 shares. So we do have a market that could move rather quickly if the highs don't hold. Again, we've talked about it, but I think we're probably going to go into next week before we see a great deal of these indexes start moving back and we see the same thing. Another gold stock out here that I find very interesting is I Am Gold. I would love it to go just a little lower, but it did go out and test at least the last major low, which was August 4th, that had 13 million shares at $3.40. Went below it yesterday. It's kind of back above it. So you'd have a pretty narrow risk reward out here. 9.4 million shares. Yeah, pretty much that's the highest volume down day against that 13 million shares. But yesterday 7.6, today 3.7 million shares so far. So going to be fairly light. But I would love for it to get into this huge volume upday candle. And that candle's back from June 3rd with 24.6 million shares. And what you're would try to do is buy it as low as you can into that candle. And the close of the day was 341. Is that right? Oh, that was that's the close. Low of the open was 305. So you'd want to buy it as close to $3 as you could on pressure if gold continues moving down. And what do we have? It's off $3.40. But I think I saw it briefly down there at that 1225 level. So we'll have to keep on looking closely. Stock I've been waiting for it to come back into the $39 level. We talked about it the last few days as IDCC, Interdigital. And when is their earnings date? October 29th. If we were ramping higher, this would be another one I wanted to look at. A nice sign of strength on June 3rd with 4.2 million shares. When we look at that, it's come back into it with basically 3.1 million shares spiked down just a few days after that spike. And what we really are looking at is yesterday's foray into that low. And that would be it. That would be the 570,000 shares we saw yesterday. I would love for this thing to get down to $39 and at least give me an option if the market's going higher to get in. What do we have here? Now, if anybody has any questions, they can call me at 877-927-6648. They can email me at path@tfnn.com or post a message in the den. And we'll be back in a minute talking about some new stuff and free money. Free money for all. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument.
By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I know everybody's getting all excited about probably the FOMC meeting and the Scott's independence and the Alibaba IPO. And we're almost done with one. We've got the next two to get through in the next couple of days. But it's going to be too late if you get sidetracked by all that stuff. And don't go to the front page of TFNN. Start looking for the virtual trading competition where we're going to get 10 grand worth of prizes away. In fact, we're going to give a few more. What is it out here? We've added a couple of bonuses to anyone that simply signs up for the trading competition. So that'd be cool, too. Just sign up. Going to get a few things, I guess. And, of course, you got to get on board here in the next 2 days. I don't want you to bypass this and just think what could have been. So while we're waiting for a rather indifferent market, probably the best time to go to the front page of TFNN and actually check in. Of course, we're going to have Tom O'Brien here in the next hour, and or actually for the next 2 hours, actually. And he'll probably talk a lot more about it, but thought I'd just mention it before the end of this show. As we look at the S&P, pretty much in the range that I was looking for after the bell. And we're at 2005 on the S&P cash. It's kind of a high point. I expect we'll kind of bounce around here. Maybe this is I thought this was probably around the top end of the range from looking at options. We'll see how the options close today and tomorrow, but certainly it looks to me like they want to close this thing around 2000 on Friday. And then we'll have options roll over Monday and Tuesday. And then I think if we're going to have any opportunity for this market to crack, that's when it will be. You know, we're looking at some of the other stocks. It was up earlier, up later. We've been thinking about Tesla out here as a short opportunity. Volume's going to be a little lighter out here today. You've got some nice gap areas back in here where this thing gapped up. I think we're going to see, those gaps really probably maybe up to 275. You might see that here by Friday. Looking at the options, we'll see. I'll try to give you a better read on it tomorrow because I normally download the data for options at about 6 o'clock at night once it's all been vetted. But it is going to be fairly interesting. We continue to see a rather wide expectation of what's going to happen in the market. And that means that they are set up or standing back about getting in to a huge movement in the market. But for all practical purposes, could we see 20 points down on the S&P cash? I think that would be the maximum. And my guess is that for the most part, 2005, 1995, looks like this market's getting awful tight in the direction of what people are doing. Far too many puts out here. In fact, I'll show you this chart before we go. This is what the S&P SPYs looked like last night. And if you look at the big movements, basically a lot of downside protection that looks like it's going to expire rather worthlessly. And not much upside protection out here. So it tends to look like people like Soros are buying a lot of downside protection that's going to expire this month. And for the most part, not worried about too much about slightly higher. So it looks like a market where a lot of people are buying equities and puts for protection to the downside. I just don't see a lot of downside between now and Friday. If it's going to come, and I do agree the markets are weak, it's going to come probably Tuesday or Wednesday next week. We'll see you tomorrow, same bat channel, same bat time. Hang on for Tom O'Brien. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.